Hello and welcome to my video tutorial. In this tutorial we're going to look at the area of company accounts, and in particular we're going to look at answering the question Consolidation Limited. You can download a copy of the question in a PDF form from my website danielkingaccounting.wordpress.com, and there are a range of other questions and video solutions available on this site. So moving on here, we have a fairly standard sort of question, so we'll just work our way down through it. So the following trial balance has been extracted from the books of Consolidation Limited at the 31st of March. So we have a trial balance there, and then we're provided some additional information. We have the inventory at 31st of March, which is the closing inventory. We have the depreciation instructions on the non-current assets, the equipment, the fixtures and fittings, and the motor vehicles. We have an accrual for the heat and light, and we provide for corporation tax. Now we're asked to produce an income statement for the year ended 31st of March. We're asked to prepare a statement of change in equity at the 31st of March, and we're also asked to prepare a statement of financial position at the 31st of March. So what we'll do is we'll move on ahead and we'll have a look at the income statement. So the income statement, now older sort of terminology, but the income statement used to be called the trading account and the profit and loss account. In the trading account part of it we work out the gross profit, so that's what we'll do first. Now at this stage you should actually know the structure and layout of a trading account, so I'm just going to fill it in here. So the trading account will be sales less the cost of sales. The cost of sales made up of the opening inventory, add on the purchases, take away the closing inventory. So this gives us the cost of sales here, figure here, and we take that away from the sales, we get the gross profit. So what I'm going to do is I'm going to go back to the question and pick out the information I need. So go back to my question here. I have my sales figure there, 240,000. I have my purchases, 115,000. I have my opening inventory, which is given to me here, 28,500. And then if I just go down to the notes, I can see this figure here is my closing inventory. So they're the information I need. So I'm going to put them in. Now I'll write the sales figure over here, put the figure in there, and then I'll step in here and I'll work out my cost of sales, or if you prefer you can use the term cost of goods sold. So when I have that, I'll bring it out here, line it up underneath the sales to get my gross profit. So just popping in those figures, 240,000 is the sales figure, the opening inventory 28,500, add on the purchases, which brings the total inventory up to 143,500. That's the amount that was available for sale. And then at the end of the year there's 45,000 left, so the cost of the goods that were actually sold came to 98,500. We take that away from the sales figure, which gives us a gross profit figure of 141,500. So that is the first little part of our income statement. Now the rest of the income statement continues straight on down. It's all one statement. I don't have enough space here, so I'm just going to go on to the top of the next page. So top of the next page, I'm continuing from above, so this is coming down. The gross profit, 141,500. So what I'm going to do now is I'm going to subtract my expenses from my gross profit. So I'm going to list all my expenses down here. So I've less the operating expenses, and I'll need to go back to the trial balance and find these operating expenses. So if I go back here, so expenses are on the debit side, and we're talking about normal day-to-day expenses. So we'll have the motor expenses, the debenture interest, we'll skip over that for the moment because it's more a finance expense. We'd have the director's remuneration, we have the rates, we have the wage and salaries, we've used the inventory, we have the light and heat. Now just remember there is an adjustment or an accrual on the light and heat, I beg your pardon, on the light and heat there. And we have the insurance. So I'm going to take those and I'm going to pop them into my under my expenses here. So motor expenses, director's remuneration, the rates, wages and salaries, the light and heat, and I just put the little asterisk there to remind me to adjust it, and we have the insurance. Now they're the expenses from the trial balance. So if I just go back here, have all the expenses there from the trial balance. If I just look at the notes, the one thing that I now have to put in is the depreciation. So depreciation is an expense. So what I need to put in here is the depreciation on the equipment. Now you are required to depreciate the following assets on a straight line basis at the indicated rates. So that means a percentage on the original cost. So therefore, if I just have a look at that, the equipment cost 60,000 and I'm to depreciate it at 10% per annum, so therefore the depreciation charge will be 6,000. The fixtures and fittings will be 5% on the cost and the vehicles will be 20% on the cost. So I'm just going to put those figures in now. So I'll have depreciation of the equipment, the fixtures and fittings, and the motor vehicles. Now I've just put a little asterisk on these figures as well, just to show that these figures I had to calculate. Like with the light and heat, I have the light and heat, but I had to adjust the figure. So when I have all those figures in, I'm going to add them up and take them away from the gross profit to get my operating profit, or profit before interest and tax. So copying the figures straight from the trial balance, you can see the motor expenses figure came to 6,000, direct remuneration 18,000, rates 10,000, wage and salaries 26,000. Now the light and heat's an adjustment, so I'll have the 6,000 from the trial balance plus the 3,000 from the notes, which will give us 9,000 in total. The insurance 5,000, and then the equipment. Well, as I already noted, the equipment is 10% on the original cost, 60,000. The fixtures and fittings, it's 5% on the cost of 25,000, which gives me 1,250. And the motor vehicles, it's 20% on the cost of 23,000, which gives me 4,600. Now I'll add up all these expenses, bring them out here, and line them up underneath the gross profit figure. So they come to 85,850. So it's gross profit less expenses gives me my operating profit, or PBIT, which is 55,650. Now again I continue straight on down. So this is all one continual statement. I don't have enough space here, so I'm just going to bring this bit here onto the top of the next page. So starting here, I'm going to have my operating profit, which is PBIT, 55,600. Now I've a number of key little things to do here. So what I have here is my profit before interest and tax. And that's what gives me a hint what I'm going to put in here. What I'm going to do is I'm going to take away the interest on loans from the operating profit, and then I'm going to take away the tax. So profit before the interest, take away the interest first, and then I'll take away the tax. So just putting that in, my finance costs, and my finance costs will be the debenture interest. So maybe just have a quick look at that. And if we have a look at this question here, we can see the debenture interest is 5,000 and it's on the 50,000 euro debenture. But there's the expense there, the 5,000. So that will give me what is called the profit before tax, the PBT. Then I'll take away the corporation tax, and that'll give me my profit after tax. Now, corporation tax is usually given as a note after the trial balance. So if I go to the notes here, we can see there it is there, provide for corporation tax of 5,000. So now I have the figures I need, so I'll just pop them in. So profit before interest and tax, then I take away the interest charges of 5,000, which gives me a profit of 50,650 profit before tax. Then I'll take away the tax of 5,000 and I get my profit after tax, 45,650. So that's the end of the income statement. So if I go back to the requirements, here we can see prepare an income statement. So we've done that. So the next thing we have to do now is prepare a statement of the change in equity. So if we just have a look at the trial balance there, we need everything to do with equity, which is the ordinary share capital. So I'm going to use that figure. And we don't have anything of preference shares. We don't have any revaluation reserves or general reserves. We do have the profit and loss account there. So they're the two figures that I need. I need my ordinary share capital and I need my profit and loss account. So I'll go and I'll set up my statement of change in equity. Now the two things I just mentioned, the share capital and the revenue reserve, or sometimes referred to the accumulated profits, they're my two columns. So I'll set up my table. And what I'm going to put in is the opening balance. In other words, that's the figure at the beginning of the year, i.e. from the trial balance. I'm going to put in then everything that's changed during the year. And in this question here, we have two things that are changing, and the fairly common things, you'd usually have these, is that you have the profit that's made for the year, the retained profit, that's the figure at the bottom of our income statement, and you'd have any dividends that are paid out, so that would be subtracted. And that'll give us the closing balances. So if I just pop in the figures, from the trial balance, we can see that the opening balance, we just looked at that a few seconds ago, 150,000 for the share capital, 17,100 for the accumulated profit, giving the total equity of 167,100. We're going to add on to that the profit for the year. Just go back here for a second. There's the profit after tax, the figure we just calculated. That's the figure I'm looking for. So what I'm going to do is I'm going to pop that in there, 45,650, and then the dividends, that money being paid out of the organisation, so I'm going to subtract that. So I need to go back here, and if I see down the bottom of my trial balance with the ordinary dividends paid of 2,000, so that's the figure that I'm looking for there. So I'll take that figure away. So what I have then is I'll have my ordinary share capital, total of 150,000. I'll have my accumulated profit, which was 17,100. It increased by 45,650, and then it comes down by the 2,000. And then my total column out here. So that's 150,000 share capital plus what is now the accumulated profit figure, 60,750, giving total equity of 210,750. So that's our statement of change in equity. Do remember when we're going through this that you can pause, rewind, play, fast forward at any point. So now just going back to the requirements, we see we have now completed the statement of change in equity, so it's a statement of financial position. Now the statement of financial position, which used to be called the balance sheet, is simply a listing. It's the assets, the capital and the liabilities. So we're going to start off with the assets, and we're going to have the non-current assets and the current assets. So if we go and have a look at that. Now we're going to do the non-current assets in a table, and in our table we'll have the name of the asset, we'll have the cost, we'll have the depreciation, and we'll have the net book value. The first one we have, I'll actually just go back and check the non-current assets. Here they are here. There's four of them. Premises, equipment, fixtures and fittings and motor vehicles. Now we've provisioned for depreciation on the equipment, fixtures and fittings and the motor vehicles. And we have instructions on the depreciation on the equipment, fixtures and fittings and motor vehicles. So in fact there's no mention of any depreciation on the premises, so we'll take it that there's none. So we'll have the premises, we'll have the equipment, we'll have the fixtures and fittings, and we'll have the motor vehicles. And we just mentioned there that there's no mention of any depreciation on the premises, so we put in a figure of nil. Now for the equipment, I'll just go through the workings on the equipment, and then you could have a go at the fixtures and fittings and the motor vehicles. So going back to the question here, we can see the equipment that cost 60,000. So that's the figure I need. I'm going to just write that in there. 60,000. Now the depreciation is the accumulated depreciation on the assets, the non-current asset, up to and including the 31st of March. So I'm going to have to calculate this figure. Now I'm going to look in two places for it. I'm going to look in the trial balance, and I'm going to look in the income statement. So I'll just do the workings on this one, and then you could go at the other ones. So from the trial balance, back to the trial balance, we have the depreciation on the equipment to date is 13,200. So I go here and I write trial balance 13,200. Now that represents, that should be a B for balance, that represents the depreciation on the equipment from the day it was bought up to the beginning of this current year. Now what we need to look at is, what is the depreciation for this current year? Well, if I go back to my income statement, previous page here, we have the equipment. We've put through a depreciation charge for this year of 6,000. So what I have is from the trial balance, 13,200 being the total depreciation from the time the asset was bought up to the beginning of this year, and then for this year I have depreciation of 6,000, which we just calculated in our income statement, giving us a total of 19,200. So I'm going to put that figure in there, 19,200. So that is the total depreciation are the wearing out or the wear and tear on the equipment from the date it was bought up to the end of the current financial year. And of course it is the cost minus the depreciation gives us the net book value. So based on this, the net book value of the equipment would be 40,800. Okay, so I'll just tidy this up a little bit and put the figures in, and then we'll have a look at the fixtures and fittings. So I'll just put in the figures for the equipment, which I've just covered a few seconds ago. So now the fixtures and fittings, what we have here is the cost. We have the accumulated depreciation coming from two sources, and cost minus depreciation will give us the net book value. So just quickly running through this one, we have the fixtures and fittings at cost, 25,000. So we put that in there. We have the accumulated depreciation coming from the trial balance. I'll just put in IS for income statement this time. So from the trial balance, we have the accumulated depreciation on the fixtures and fittings at the start of the year, 5,400. And from the income statement, the depreciation charge we put through this year, for the fixtures and fittings, 1,250. So that's 1,250. So that's 50, 4 and 2 is 6. So that's 6,650. So I'll put that in here. 6,650, which means the net book value then at the end of the year for the fixtures and fittings would be 18,350. So again, what I do, I'll just tidy this a little bit up, and then we'll pop in the motor vehicle figures. So there we go. So pop in those fixtures and fittings, and now I'll just put in the motor vehicles. So remember what you have to do, you go back to the trial balance, get the cost, then you go back to the trial balance, get the depreciation, and go to your income statement, get the other depreciation figure for this year, add them together, and work out the total depreciation, take it away, and you get a net book value of 11,600. Okay, so what I'm going to do is I'm going to add up these three columns, and you'll just notice here that I've underlined the cost and the depreciation, but I haven't underlined the net book value. Because in fact this little table here, just draw a ring around it like this. What we're looking for here is the net book value of the non-current assets, which is 190,750. We'll continue with this figure here, but we're finished with everything else. So we have the non-current assets, so what we need to put in now is the current assets. So I'll just put that in there, and we just need to go back to the trial balance and look for the current assets. So going back here, current assets, well, assets have always been the debit side. So if I go down to the debit side, I see there receivables, so that'll be one. Bit further on down, we've got bank, that's another one. Bank overdraft, that'll be a liability. Now there's nothing else there, except always remember that we also have the closing inventory, which is given in the notes. That figure there, 45,000 is the inventory on hand at the end of the year. So I'm going to pop that in as well. So in this question here, we'll have three current assets: the inventory, the receivables, and the bank. Now when I add all those together, and I add the current assets onto the net book value of the non-current assets, I get my total assets figure. So if I just pop in the numbers there for the inventory, 45,000, the accounts receivable, 45,500, and the bank, 4,000. And then I'll add that up, bring the total out, line it up underneath the net book value of the non-current assets, and I'll get then my total asset figure, which is 285,250. 285,250 is my total assets. Remember, the balancing part of this is assets must equal to capital and liabilities. So what we're going to look at now is the capital and the liabilities. And the total of capital and liabilities has to be the same as the total assets. So what we're looking for is a figure of 285,250. So moving on here now, we have the second part of our statement of financial position, which is the capital and liabilities. So I'm going to put in then the capital first. So if the ordinary share capital plus the reserves, which is the profit and loss account, now that figure there will be the ordinary share capital 150,000, and the profit and loss account of 60,750. Don't really have to work that out, because I just go back here to my statement of change in equity. There's the 150,000, there's the 60,750, and there's our total. So in fact, that is more or less done for us. So I add those out there, and we get total there of capital plus reserves, 210,750. Now I'm going to add in my liabilities. Now, firstly, I'm going to put in my long-term or my non-current liabilities. So back to the question here. Liabilities, of course, will be on the credit side. Well, I've just used the share capital, so we got the debentures. Debentures, another name for long-term loans, or an alternative name for long-term loans, but the figure is 50,000. So I'm going to put that in. So I have debentures, 50,000. Now I'm actually writing this all the way over here because under my heading of non-current liabilities, there's only one item. So I'll just bring it straight over here to the extreme right-hand side. Now finally I have my current liabilities. So I need to go and have a look for these. So if I go back to my trial balance, liabilities will be on the credit side of the trial balance. So everything should be used now except for what I'm going to pop in under my current liabilities. So if I have a quick look at that, I can see I have payables. That's a current liability. I have the bank overdraft, which I mentioned earlier. That is a current liability. That's everything in the trial balance. So just looking at the notes then, I have the heat and light accrued. That'll be a current liability, accrued expenses. And we have the corporation tax. So that corporation tax hasn't been paid yet, so that will be a current liability as well. So that's the 4 items that I'm going to put in. So if I just list them there, the accounts payable, the bank overdraft, we have the corporation tax, and we have the expenses accrued. Now I'll just put those figures in. The accounts payable, 14,500. We have the bank overdraft, 2,000. We have the corporation tax of 5,000, and with the expenses accrued of 3,000. Now I'm going to bring this over here and line it up underneath the ordinary share capital plus reserves plus the non-current liabilities, and then I'll also have here now my current liabilities. And then when I add that all up, that'll give me my total of capital and liabilities, and that figure comes to 285,250. Let me just go back here for a second then. So I have total assets, 285,250, equals capital and liabilities, 285,250. Okay, so that finishes that. So back to the requirements then. We see we have done now the statement of financial position. So we've completed all 3 requirements. And we've used everything in the trial balance. And in the additional information, everything's been used twice. Once in the income statement and once in the statement of financial position. Okay, so that is the question completed. Consolidation Limited, which is a company accounts question. And please remember that if you want to look at additional questions, there are additional questions. Questions are in a PDF format, so they can be downloaded, and then there's links to the video solutions. I'll be adding more questions and solutions over time, so keep checking in. And thank you very much.